For decades, pretty much two names have run the entire show when it comes to how we pay for things: Visa and Mastercard. But there's a new technology bubbling up, one built on crypto, that could rewrite the rules of money entirely. So today, we're going to break down how these two absolute titans are handling this new world. Okay, let's just dive right in. The big question we're tackling here is this: which of these giants is really set up to win? Not just to survive, but to actually thrive in a future that might be powered by blockchain. And to really get what's at stake, you have to understand the sheer scale we're dealing with. I mean, look at these numbers. We're talking about a combined market cap well over $1 trillion. And together, they process something like $26 trillion in payments every single year. Make no mistake, they are the duopoly that forms the backbone of global commerce. So, how in the world did they get so powerful? Well, let's pull back the curtain on their actual business model. Now, here's something a lot of people don't realize. Visa and Mastercard, they don't actually issue that plastic card that's in your wallet. Your bank does that. What Visa and Mastercard own is the really critical piece: the network. They're like the toll road operators for money. They license access to this road to banks and to merchants, and they take a tiny little fee on every single transaction. It's like getting a tiny crumb from trillions and trillions of cookies. Those crumbs add up fast. But for the first time in a very long time, something new has shown up on the scene. A technology that could build brand new payment rails that, get this, could bypass their networks completely. And that challenger is the stablecoin. Now, for anyone who's not familiar, it's a type of crypto designed specifically to avoid those crazy up and down price swings you see with something like Bitcoin. The whole idea is that one stablecoin is always supposed to equal $1. That makes it, potentially useful for actually buying things, not just for speculation. So what's the big deal here? Why is this so promising? Well, stablecoins could create a world where money moves instantly, 24/7. No more waiting for banks to open on Monday morning. They could slash the costs of sending money across borders. And they even allow for something called programmable money. I mean, imagine this: an automated allowance that only pays your kids after they've actually completed their chores. Or a subscription that just cancels itself if it sees you haven't used the service in a month. The possibilities are kind of wild to think about. Okay, so you'd think Visa and Mastercard would be panicking, right? That this is some kind of existential threat. But, and here's the real plot twist, they're not fighting it at all. In fact, they're leaning right into it. And their strategy is frankly brilliant. Instead of trying to stamp out this new technology, they're working to become the essential bridge between the old world of finance and this new crypto ecosystem. They want to be the main on-ramp and off-ramp for all of these new digital dollars. Just take a look at Mastercard. I mean, they're not just dipping a toe in the water here. They are building an absolute arc. Their crypto partner program has roped in over 85 of the biggest names in the game. We're talking companies like Circle, Binance, and Gemini. They are aggressively making friends with the future. And look at how comprehensive their approach is. First, they're partnering with crypto wallets to issue actual cards. Then, they're letting you spend your stablecoins anywhere you see that Mastercard logo. And finally, they're even making it possible for merchants to get paid directly in stablecoins if they want. They are weaving themselves into the very fabric of this new ecosystem. Now, Visa's running a similar playbook, but they're taking a slightly different angle. They're going after the big money, investing heavily in the business-to-business plumbing needed to help companies move huge sums of money around the world using stablecoins. It might be a quieter strategy, but it could be incredibly lucrative. For both of them, the end goal is exactly the same. No matter what form money takes, it's their network that's going to move it. So you gotta ask, right? If this new tech is faster and maybe even cheaper, how do these giants possibly plan to stay on top? Well, it all boils down to one simple, powerful word. This quote from FinTech Weekly just hits the nail on the head. We've all been using their cards for our entire lives. We know them, we get how they work, and most importantly, we trust them. That trust, that's their ultimate moat. It's their secret weapon. And what does that trust actually mean for you and me? Well, it's this whole trust layer they've built over decades. When you pay with your credit card, you get fraud protection. If you buy something and it's a dud, you can issue a chargeback. There's an entire system for resolving disputes. These are the critical protections that are, for the most part, completely missing when you're just sending crypto from one wallet to another. And that protection is incredibly valuable. All right, so they're both banking on that same secret weapon, trust. But, and this is a big but, they are not the same company. not by a long shot. So let's put them head to head and see who really has the edge in this new world. Okay, so in one corner, you've got Visa. It's the undisputed king of scale. It has better profit margins and a balance sheet that's like a fortress. In the other corner, you have Mastercard. Yeah, it's smaller, but it's growing faster, and it's often seen as the more nimble, more aggressive innovator of the two. And the numbers really tell the tale here. I mean, just look at that operating margin for Visa. 68%. That is just an insane number. It shows you how incredibly profitable their scale makes them. But then, look over at Mastercard's revenue growth. It's outpacing Visa. You can also see Visa's financial strength pretty clearly in its much, much lower debt level. And if we just look at this on a chart, it becomes crystal clear. See that gap? That's what massive, unbelievable scale gets you. It gives Visa an incredible cost advantage, letting them squeeze more profit out of every single dollar that flows through their system. So at the end of the day, it really boils down to a classic investor's choice, doesn't it? Do you bet on the established king, the one with the fortress-like profitability? Or do you bet on the nimble prince, the one who's growing faster and taking more risks to catch up? But here's the thing. What this all really points to is that the future of payments probably isn't an either-or situation. It's not going to be traditional finance or crypto. It's going to be a hybrid, a mashup, where you get the trust and the reach of the old system, fused with the speed and the innovation of the new one. And both Visa and Mastercard are betting their entire futures on that idea. And that leaves us with one last, really important thought to chew on. The game isn't about replacing that piece of plastic in your wallet anymore. It's about owning the invisible network that powers that card, no matter what kind of money it's spending. The real question is, as they both place their multi-billion-dollar bets on what's next, whose bet is going to pay off?